Hey, I'm sure you'd like to know how your favorite delicacy is priced in the GST regime. Let's find out. The uniform taxation rate used throughout is 10%. A farmer buys raw materials or inputs worth rupees 100, a sum that includes tax of rupees 10. With this raw material like seeds and water on the farmland, he produces wheat. In the process of producing wheat, the farmer adds value to the materials he started out with. Let us take this value added by him to be rupees 30. The gross value of the wheat would be then rupees 130. At a tax rate of 10%, the tax on the output will be rupees 13. But under GST, he can set off this tax against the already paid tax on the raw materials, which is rupees 10. Therefore, the effective GST incidence on the manufacturer is only rupees 3, which is rupees 30 minus 10. His next stage is to sell the wheat to the miller to convert it into flour. The miller purchases it for rupees 130 and adds on value, which is basically his margin of say rupees 20. The gross value of the flour is rupees 150 then. A 10% tax on this amount will be rupees 15. But again, under GST, he can set off the tax on his output against the tax on his purchased good from the manufacturer, which is rupees 30. Thus, the effective GST incidence on the wholesaler is only rupees 2, which is rupees 15 minus 30. In the final stage, the miller sells the flour to the baker, who then bakes the cake. To his purchase of rupees 150, he adds a value of say rupees 10, so the gross value comes to rupees 160. The tax on this will be rupees 16, but by setting off this tax, the retailer brings down the effective GST incidence on himself to rupees 1, which is rupees 16 minus 15. So the total GST on the entire value chain through the manufacturer, wholesaler and retailer is rupees 10 plus 3 plus 2 plus 1 or rupees 16. In a full non-GST system, there is a cascading burden of tax on tax as there are no set-offs for taxes paid on inputs or on previous purchases. Basing on the previous example, the farmer buys raw materials at rupees 100 after paying tax of rupees 10. The gross value of the wheat he produces would be rupees 130, on which he pays a tax of rupees 13. But since there are no set-offs against the rupees 10 he has already paid as tax, the good is sold to the miller at rupees 143, which is rupees 130 plus taxes. With the miller adding value of rupees 20, the gross value of the goods sold by him is rupees 163. On this, the tax at 10% is rupees 16.30, which takes the sale value of the good to rupees 179.30. The miller again cannot set off this tax. The baker thus buys the good at rupees 179.30 and sells it at a gross value of rupees 208.23, which includes his value addition of rupees 10 and a tax of rupees 18.93. Again, there is no mechanism for setting off this tax on the baker's sale against the tax paid on his previous purchase. You can notice the price difference between the non-GST as well as the GST regime. This is majorly because of the taxation structure and the uniform tax rate assumed here. For non-GST, the tax is at rupees 58.23 and for the GST regime, it is at rupees 16. We hope this video provided you with a better understanding of goods and services tax and is a cake for you. Support us by hitting that like button and that subscribe button, and we'll keep mapping. Thank you.